In today's video, I'm going to be showing you exactly how I made over £2,700 trading the euro against the New Zealand dollar. For those of you that are new to the channel, my name's Antonio and I'm a full-time Forex trader from the UK, and I'm bringing you on this journey with me to show you what it's like to make a living from the markets. Now, not only did I post this analysis on my Instagram, but I also posted this in my VIP group where many members were also able to take advantage of the same position. And if you want to join the group and take your trading to the next level, just click the link in the description below. And if you're not already subscribed to the channel, make sure you hit that subscribe button so you don't miss any more content. But for now, let's jump straight into the video. Right guys, so here we are on euro against the New Zealand dollar on the 15-minute time frame. And what I normally do to start my analysis is just to identify the highs and the lows and price action, just to see whether buyers or sellers are in control and identify the trend of the market. So the first thing I can see going on this chart is that we had this huge decline within the market where sellers were clearly in control. We were forming these lower lows followed by lower highs, strong impulsive moves until we approached this level in the market down here where we saw this strong bullish impulse to the upside. Now, this bullish impulse is significant because we broke through structure. Okay, this level over here, this strong level of support, which was previously used as a resistance for sellers to create their lower high, has been broken through with price creating a higher high within the market. Okay, so this move here is our confirmation that there is a break in market structure and that price is now essentially bullish. So as traders, we should be looking for buy positions. However, after price forms an impulsive move, as traders, and how I like to trade is I always like to look for a bearish correction, because the way the market likes to move and how I like to trade is by allowing price to form the impulsive move, breaking structure, which is our confirmation. I then like to allow price to form a correction to the downside, and then I look for that continuation, okay? And it's on this continuation where I'm trying to catch my position. This impulse move is the confirmation. This correction is the waiting game where we're waiting for price to correct down to key levels. And then the continuation is what I'm looking to trade on. So that's exactly what we had here. We had this strong impulsive move. And then as you can see, price began to correct to the downside in this descending channel, okay? So price is technically forming lower lows followed by lower highs within this correction. However, if you look at the way the market is moving, we had this strong impulsive move, and now this is just one big correction. Now we're looking to see where price is going to correct down to before we take our buy position, okay? So there's a couple ways we can do that. We can look for key support levels, we can look for our Fibonacci retracement levels, and in this scenario, I actually used both. So if I draw on my Fibonacci retracement tool from swing low, drag it all the way up to swing high, you can see how we have rejected multiple times the 78.6% Fibonacci retracement, which also lines up with this level of support within the market, okay? This level of support where clearly buyers have stepped in and shown interest makes me feel like there's orders sat down at this level, which is what drove this move within the market. Not only that, if you look at price action down here where price was previously forming these lower lows followed by lower highs, you can see how price, as we started to approach the 78.6, where we were forming lower lows within the market, price then fell to form a lower low and instead formed an equal low. So this right here is what we like to call a double bottom within the market. So as we get in lower and lower, the market is providing us with more confirmation and evidence that a reversal is due. However, as traders, we are not looking to catch the bottom of the move. We do not need to get in down here because there is a lot of upside potential. Where am I looking to potentially target? I'm looking to target the high points over here where price started to decline from. This is where my overall targets were on Euro NZD. Okay, so there is a lot of upside potential here. So we do not need to be getting in all the way down here. We want to be showing more evidence that price is breaking through key levels. So then it makes our probabilities stronger. So then we can look to get in the trade, you know, with a high risk to reward at a more probable rate. So anyway, what did I wait for? Price is forming these lower lows followed by lower highs, right? So I need to see structure broken. I need to see the most recent lower high broken, because as you can see, as price did impulse away from this double bottom here, we did form this resistance level up there. So this time in the market, overnight, if you look at the timings down the bottom, this is 3-4 o'clock in the morning anyway, so I wouldn't even have been awake to enter this trade. But as you can see, overnight we started to make this impulse move, and then by 6 in the morning we started to form this resistance. Okay, so because this resistance was being used, as a trader, you have to have an understanding that sellers might want to jump in the market at this level to drive price down. So in order to get those sellers' interest out of the market, I need to see this level broken, and that is the confirmation for me to then be looking for my buy positions. Okay, so the way I looked for my position was I jumped down to the lower time frame. We're on the 15-minute right now. I'm going to drop down to the 5-minute time frame to get a more in-depth and detailed view of what is going on as price breaks this level here. So we're on the 5-minute time frame now, and as you can see, let me just clean this up a little bit for you guys. As you can see, as price does break through that level of resistance, we actually break through it and retest it as a level of support. Now, I'll be honest with you guys, I wasn't actually on the charts at this time. I believe I was probably at the gym. But at 8:30 in the morning, I'm not in the office, so I didn't take this trade. But this would have been another good position to take. Okay, notice how price is using it as a resistance. We then break through, we then pull back, and price forms a higher low. That would have been a good level to also enter a buy position. However, the market is an endless pool of opportunities. So whether you miss an opportunity, you can always get in later on down the line. Now price is bullish and we're continuously forming these higher highs followed by higher lows. We can just jump in on all the swings available to us. And that's exactly what I've done here. So as you can see, this is the new level of resistance right here. And as price is broken through that, price has also pulled back to form a new higher low point. And as you can see, this doji candle that we're forming in the market here, this is an indecision candle. Okay, we are looking to see after this indecision candle if buyers continue to step in, and that is when I looked to jump onto the market. Okay, and if I just play this out, you can see we have a strong candle. Now I don't wait for candle closes. I don't use any kind of chart candlestick patterns. I'm purely looking in real time at the momentum. If I can see that buyers are stepping in after this candle, that is when I'm pulling the trigger. I have no specific entry criteria. I am just looking in real time on the market when buyers are stepping in. Okay, and I got in around this point here, if it'll let me edit, 31, and then my stop loss was below this low point here. Okay, below the doji candle. Now my targets, let me jump back up to the 15-minute time frame. My targets were up here within the market, so aiming for around a 1 to 12. Now jump back to the 5-minute time frame. Straight away, we basically continued to shoot into profit, and as price broke this most recent level of resistance, my stop loss was trailed to break even. Because we're now forming new structure, I need to protect my capital at all costs. Let's continue with price action just so I can show you what happened. We're continuing, and as you can see, price is forming more and more structure, right? This is a high point within the market. We're pulling back, forming a higher low, and then as price makes this another impulsive move, I am just trailing my stop loss into profit. So I now trailed my stop loss below this low point. Let's highlight this and give it a name. Let's call this stop loss. Okay, so this is my stop loss level now. As price is forming structure, I'm trailing my stop loss into profit to essentially, take some profit off the table if worst case price was to reverse on us. I don't believe in, set and forget. Personally, in my opinion, I believe you have to actively be managing your positions without emotions. You have to have a plan in place. But I believe in managing your positions whilst you're in it to basically maximize on your profits, whilst also limiting your potential losses as well. So anyway, let's continue. Price is moving towards the upside, continuing to form structure. Once again, as you can see, we're breaking through the high point. So every time price breaks through a high point, I am trailing my stop loss below structure. This is the new structure point. I'm trailing my stop loss there. Now, what you're going to start to notice, once again, we break through structure. Let me drag this across. My stop loss is continuing to increase. I believe I trailed it to around 401. Let's leave it there. Let's see what happens next. Right. So at that point there, okay. So at that point there, guys, I have been stopped out into profit. Okay. So my overall risk to reward on this trade is a 1 to 4 is what I managed to gain on that. However, if you notice what's happening now, right? So we've had that impulsive move to the downside, stopping us out. Notice how now buyers are stepping back into the market. Okay. Buyers are stepping back into the market, 2 strong bullish candles. What tends to happen is when you're getting stopped out of the market, when you're getting stopped out and then you see this happen again, it can be very, very easy to just re-enter the market because of fear of missing out. You feel like you've been victimized, you know, you want to jump back in because you feel like price is going back to the upside. But what you need to remember is you're trailing your stop loss for a reason. You're trailing it in case price was to reverse. And what that means is the probability is now against your favor for buyers, right? And let's just take a look at market structure for a second. We need to view the market from both a buyer's and a seller's perspective. What can you see going on here? Price has failed to form a new higher high within the market and instead formed a lower high. And using my favorite chart pattern, guys, I can see right here that price is forming or has formed a head and shoulders pattern. So this has stacked up the probabilities and interest for sellers to now start entering the market. So as a buyer, I need to be aware of this, and I no longer want to be in this market in a buy position because I know that there are bearish market structure forming. And as you can see, if I continue, bearish market structure does continue, and we've done very, very well to exit our position where we did. Okay, this is why you need to not set and forget and just let your trade run to take profit. You actually need to be analyzing the trade whilst you're in it to see whether you need to get out early, whether you need to trail your stop loss, or if you can continue to hold to take profit. Another thing as well, if I go to the 15-minute time frame again, if we measure the move that initially happened over here with this impulsive move, okay, this move over here, if I measure that out, you can see if I drag this across how the same move from this impulse down here is exactly the same length, which is potentially why sellers have stepped in and buyers have been taking their profits. So yes, we might have had a, you know, overextended target. However, I managed my trade accordingly just in case sellers were to step in and drive price down. So rather than getting stopped out at break even or even at, you know, a stop loss, I was able to take profits at a good area before price was to reverse. Okay, so that's how you should be managing your trades, guys. But anyway, good trade overall. That is Euro NZD, how we managed to make over £2,700. The VIP group also managed to take positions on it as well and manage their trade accordingly. But yeah, guys, great trade. That was Euro NZD, and we will now go into the outro. Thank you for watching this video, guys. If you enjoyed it, make sure to leave a like and a comment. Let me know your thoughts in the comment section below. And remember, if you want to join my VIP group where I go live multiple times a week, breaking down my analysis and sending in my trades every single day, just click the link in the description below. Have a great rest of your week, and I'll see you in the next video.